Busy week for the markets. Let's just go right through it. I'll cover what happened this week, comparing kind of how things did in the market relative to what people expected going forward and how to think about that in the future. I'll start to get a little bit now that we're in this final 2 months of the year into some of the surprises that I think will start to become a story next year. But I wouldn't be surprised to see these play out to some degree in the final 2 months of this year. So I think it'll be worth watching. Fed in China keep the liquidity pump going. Briefly go through that, and then obviously the major focus for me in terms of what happened this week is going to be Bitcoin. So if you didn't see this, it was the biggest post-election day session ever for the S&P 500, up 2.5%. Vol collapsed, not surprisingly. I think the main point, which I brought up last week, was part of the reason for the rally was that there had been a lot of protection that was put on. This is the VIX showing how far it was down, but even the bond market, and that's the focus that most of the perma bears had jumped on, was that rates were moving higher and 10-year yields were going to be an issue. I think Stan and Paul in their conversations about bonds got people a little freaked out, thinking, despite the fact that the Fed was in the midst of cutting rates, that it would just be the major thing. And you saw vol come down. And when vol came down, that led to probably some surprises in the areas that people would have been more worried about. 10-year rates unchanged for the week. So despite the fact that Trump won, you didn't get continuation in the move as of yet. And gold was down for the second week in a row. The one place where it absolutely did continue is Bitcoin. Obviously, for those of you now watching on Sunday, we're right around 80,000 as we go, so it's up further over the weekend, but it was up 14 or 15% in the last 7 days. Here's a chart of it. It broke out. Still looks like it's headed towards 100,000 and has a head of steam going with it. So Bitcoin is definitely the one place that has continued. And I think it'll be a big year for Bitcoin next year, dragging people in, especially as I go through kind of my themes coming out of the election. So the major thing for me is I've highlighted how bad the surveys have been, whether it's the confidence, UMich confidence, consumer confidence, the manufacturing PMIs, the small business optimism PMIs. There's just been so much that's been down, and a lot of it has to do with regulation. And I think the major theme that is starting to come out there more and more is a reduction of regulation, which Trump has talked about, and I think that got people going. And there's particular industries which is big with this is big for. The M&A side, I mentioned Lena Khan as a big surprise that would help not only for tech companies looking to do mergers, but also for smaller businesses which just haven't had the monetization. So that was big. You had a big move in the financials this week, and I think this is the first place that I want to go is financials, and I'll get into it with Bitcoin later as well. You do have a chance here for a very, very big change in the financials in terms of the deregulation side. So no matter where you go through the news, it's out there. The banks had a big move. Mike Mayo, in terms of talking, sees a paradigm shift for banks on Trump deregulation. Here's the thing that I just want to, I really think the blockchain and AI agents in particular are going to have a big impact on what goes on next year and over the next 2 years. And I think that's where you can see some positive innovation surprises and some of the cost benefits that'll come. Next year is about AI agents being rolled out, and it's about the ability for the blockchain and crypto with the digital payment side to really start to accelerate. And I think with the Stripe purchase of Bridge and the acceleration of stable coins, I think this is going to be a theme that people are going to talk about next year. So the banks had a big week. This is the BKX for the week, up 8%. The smaller banks, the regional banks, were up over 11%. And the Goldman Sachs deregulation basket did extremely well in terms of companies, emphasizing companies that would benefit from deregulation. Where this all fits into on the surprise side, most people I heard talk about didn't understand why small caps were going higher. They focused on the fact that if rates are going higher and if it's believed that with Trump rates are going to go higher, why would small caps do well? Well, the first thing is the Fed is cutting rates, and so you can believe in a steeper yield curve, but I wouldn't say that that would be until we get up higher. We need inflation to go higher because the Fed is still going to be easing. And I just think trying to play as the best trade for rates to go higher and for small caps to get hurt by rates moving slightly higher, I just don't think is the right trade at this point. Maybe it does at some point, but you have to remember that the banks are a big part of the Russell 2000, and so you had the best week for small caps since coming out of COVID back here in 2020. I wouldn't fade this move. I think this is the beginning of something there, partly because of the banks, and I'll show you the importance of the banks. This is the relationship between the BKX over the SPX. That's the white line. And then you have IWM over the SPY, which is the orange line. So if you're going to get any kind of benefit of what I'm talking about here in terms of the blockchain and AI agents and things that'll benefit companies like the financials, and I think the financials will benefit the most, that's one place where it'll help small caps. The second thing is on PMIs. So this is the relationship between small caps relative to large caps. That's the white line. So that's IWM over SPY. And this here is the PMIs. So the manufacturing PMIs. So I've talked about this relationship too. They have a lot of sensitivity to commodities and the PMI. So if we start to see manufacturing trade higher, it should benefit small caps. And I definitely think because of the liquidity pump going on around the globe, in particular China's focus on stimulating, and at the same time, a lot of the policies that Trump has towards onshoring, a lot of different components in my mind, I think it would be a mistake to fade small caps on this move, and particularly related to the PMIs. Another positive side for the PMIs, we had a very big jump in the service PMIs. So that's this overlaid with the manufacturing. So on the service side, we jumped up, and right now we haven't had any bump back up in the manufacturing, but I do think that that should happen. This is the Goldman Sachs U.S. cyclicals versus defense. So this takes away from the international side. That's the white line here. It's been diverging from the PMIs, but you have to remember the PMI started to have an up move here following it. Then we had this sharp down move, and I think some of this was related to the election, and some of this was just related to the fears that people had overall. And we've had this thing break out in terms of cyclicals versus here. So I would strongly look for PMIs to surprise on the upside. When you shift to the fundamentals for this, it's made sense that the S&P has done better. Here's the EPS for the S&P. It traded higher, went through the highs. This is the mid cap and the small cap within the S&P. So you've had a decline in earnings over the last 2 years since rates went higher and since inflation went higher, but now you're starting to bottom out. These companies have been forced to cut expenses. They've been forced to change up some of their business models. And again, I think small caps are going to benefit from a rolling out of AI, which has really been the thing that's hurt them so far. And from a valuation perspective, forget just the earnings. Right now, the S&P is significantly above the PEs. This is the PE of the S&P 500. These are the PEs of mid-cap and small cap. This is where they've been historically. So historically, you've had mid-cap and small-cap PEs be above the S&P 500. Right now, you have it reversed. And the mega-cap names are really what's driving that, because you've been able to have mega companies grow their earnings significantly, and now we're at a point where I think people have to start focusing on this. I want to make sure. So when I talk about tech now running into a problem to deliver profits, this is on how much money they're spending. When are they going to get the revenue side coming through, since their expense side is going up from the CapEx? There's no way they can cut as many expenses as the CapEx is growing. I'll show the CapEx in a second. But the reason this is important is if mega cap tech is not able to grow in a similar way, and they've already seen their earnings peak, I think you have to look outside to just NVIDIA, which has benefited a lot from the CapEx boom, and where all this stuff is going to roll out. So for tech next year, if you don't have it doing well, and the PEs are for mega cap tech are anywhere from 20 plus up to, let's leave Tesla at 100 out, you're getting into the 30s and low 40s. I don't think I still think they're going to benefit from AI. I still think they're going to be able to keep their profits growing, but I don't think it's going to be as easy as a situation as it was before. Here are the CapEx numbers. If you haven't seen them in this way, they are just exploding in growth. There's a race for, as I put, digital gods, and they're saying they're not going to stop spending. So if you're going to keep spending and you keep going through this, you're going to run into a situation which I've talked about. This is my Substack that I did 2 weeks ago on power. I really do believe that people have to start to equate the power that's needed for the future. So you can love AI, you can love crypto, but at the end of the day, you need power for this. And that is the linkage between the futuristic world of the digital side and the PMI world. And if energy is needed, which it will be, that's where the linkage comes in and it changes. And I think that's the surprise that's coming. I've mentioned it. I would watch oil. Oil was a surprise last week. People expected the drill, baby drill, to knock down oil. It hung in there. Sentiment is really low in it. Gas at the pump is down to 308 as of this morning across the country. It's at the lows. Any uptick in energy, and I think you're going to see this shift away from kind of the spending that's going on and more towards some of the commodity related stuff. Even if it's a short-term trade, I think with China and the US and the power needs, it's there. This is the Goldman Sachs data center power needs. This is their index on this stuff. It was up sharply last week. It's had a huge year. I think this trade is still in play, and I think people should be focused on it. I mentioned the earnings just to highlight, we're coming from a period in the first quarter of this year of just tremendous Mag 7 earnings, and now we're settling back into a range where it's in here. I don't think this is negative. It's very positive for the market as a whole, but we are entering a different place. So just this week, Agent Force, if you go to salesforce.com, you start to see that they're rolling this out. At the same point, they made the announcement that they're hiring people to take advantage of the AI momentum. This is as they roll out Agent Force. So they're out there, and you can see it here. Agent Force became available just 2 weeks ago. Already hearing incredible feedback. This is going to be a major part of next year's story is the AI agents. And then Google accidentally leaked its AI agent that browses the web for you. If you haven't spent time on this, this is here. It's coming. It's big. AI agents are right around the corner. It's going to have a huge impact to businesses. I'm already spending a ton of time on this for what I'm doing to try and save me efforts in terms of going out and finding stories for you guys. The onshoring index, again, this is a big play here as the tariff situation continues to be a focus. I think you have to focus on what that means for the domestic side. And so this is the Goldman Sachs again. This is the weekly move, the biggest one since 17, which is, again, at the tariff year, or right around, that was the tax year, I guess. But in terms of preparing for the tariffs after he took over. So I would just spend a lot of time on the domestic side. In terms of the Fed, real quick, I just want to make sure that people read this. Inflation's on a sustainable path down to 2. We expect there to be bumps on inflation. So the first time that we get a little inflation bump, which we're going to get at some point here, in my opinion, he basically said, don't even worry about it. 1 or 2 bad data months on inflation won't change the process. I mean, you can't be more dovish in terms of if inflation is your big fear. There's no way we're going to have a massive acceleration in growth. We're already growing at 3%. We know the labor market has weakened. So the real thing is he's basically already saying we can complete inflation tasks while keeping the labor market strong. So I just think it's important. And he did highlight the fiscal path is unsustainable. I think this leads into the second point, which is there will be more stories between Powell and Trump as the year goes on. So I bring this up more for volatility as we get into what he plans to do. China, just real quickly, people, I still find them to be doubting China, which is fine. Again, I've said it before. They're putting a floor in there. They are trying to get GDP up to 5%. Anything that changes the domestic side with retail and animal spirits, it'll have an impact on global commodity markets for sure. Not in a major way, the way that it has in the past, but it will have an impact on gas prices if people are just consuming more. So you want to pay attention to it. If you haven't really realized what has gone on, they've had some success. So they were up 5.5% last week. This includes after the package. On a weekly basis, the Shanghai Composite made its highest close since early 2022. So you are seeing this, and in terms of animal spirits, no better way to judge it than since they started doing the stimulus measures. This is the turnover, the volume, and basically the Chinese market, no matter how you measure it, the volume has exploded compared to where it was before. People are involved. They've made money, as this is the Shanghai Composite again. So for anyone who's fading it and has faded it, they've been wrong. This is a story, and it's important for global liquidity, and it's important to keep in the back of your mind. Final part of this week is all on Bitcoin. I just want to remind people, so Paul talked about this, and the reason that I'm bringing this up more and more is I'm having more and more conversations trying to convince people that they should have Bitcoin in their portfolio, and I'm still shocked at how reluctant people are, and they're giving arguments for fundamentals, which I've answered in the same way that Stan has, and I still don't understand. Assets going higher has been about money and liquidity. And I agree with Stan. Earnings don't move the overall market. It's the Federal Reserve Board. Focus on the central banks, the overall market. The reason this is so important is, yes, companies can outperform other companies, but what makes the market go higher, what makes PEs in the S&P be at 25 or 23 right now, as opposed to 7, is liquidity. It is the amount of money that's flowing in the system, and Bitcoin is a major part of that. And if you need to have some proof and just read something, back in 2020, this is the May of 2020, this is a part of Tudor's fund, his newsletter for the month of May of 2020, which was after COVID, put out, it's a must read if you're really looking for something. I just want to highlight, it has happened globally. This is on the massive fiscal spending, which speed that even a market veteran like myself was left speechless. Just since February, a global total of $3.9 trillion, 6% of global GDP, has magically been created through quantitative easing. We are witnessing the great monetary inflation, an unprecedented expansion of every form of money unlike the developed world has ever seen. That is still there. And so when people are looking this, all Bitcoin is for me at the end of the day is part of this liquidity thing, but it is absolutely positively a hedge against the fiat system. And it's the entryway into the digital world. So he goes on to write in here, protecting my capital is ever-changing environments. I'm invested in the instruments that respond first to the massive increases in global money. What will be the winner in 10 years' time? So this is what he writes in here as of May of 2020. At the end of the day, the best profit maximizing strategy is to own the fastest horse. My bet is it will be Bitcoin. He goes through the store of value here. The reason I wanted to just highlight this, here's what's happened since he wrote that paper in May of 2020. Here's the S&P 500, which everyone has enjoyed. It's doubled. Here's gold, which everyone talks about now like it's some dramatic move. It's up 50%. And here's, if you own bonds in your portfolio, here's IG. It's down 3%. Bitcoin's up 700% since there. And this is through Friday at 77,000. It's currently 80,000. So you have to have kind of a viewpoint on what's going on because there's more liquidity coming. If I haven't mentioned this, 42 Macro is Darius Dale is the only research that I pay for. I like analytics, as you guys know. He does the best job I see out there, and he's writing this piece, and all of his liquidity stuff, pumps, are turned up dramatically into next year. So I just, I want to make sure people realize that this is a liquidity thing, and I really do believe with AI agents and with digital payments accelerating next year and the blockchain accelerating, crypto is not only the major story for technical reasons, but then it's also because of this. And if you haven't spent time on the election, why Trump wants to make America the crypto capital of the planet. I'm giving you these things to go read on your own. I put this in there just because I'm gonna go through this thing of why this is the crypto golden age, which I do believe. So all the slides after this is someone who's obviously involved in this because he has a stablecoin firm. But in the elections, I've mentioned the crypto PAC. They supported 48 candidates, they were 48 of 48 that they backed in this election. Crypto had an impact on the election, which means it has a mandate coming out of this. Crypto's a clear winner with Trump as GOP takes Senate. Sherrod Brown, Senate Banking Committee leader, loses. Gensler heading out the door. I've talked about the importance of Gary Gensler from a dereg perspective. This is just more on the celebration going down as Ohio Senator Sherrod Brown, who had been against on part of the anti-crypto group, was replaced with Republican Bernie Sanders, a blockchain entrepreneur. So remember, you've already got J.D. Vance, who is a crypto owner. You've got Trump, who spoke at the crypto. Crypto is part of this campaign, and it will be. And this means that Gary Gensler will lose his seat under Trump. So this has been a major thing. The deregulation of the crypto world has been much more than people realize. It was much more than I realized over the last year and a half, and in particular the last 7 months where I've had more time. I've listened to so many podcasts with crypto people that I respect, and they've talked about Wells notices and the regulations that they've had to fight through continuously. Operation Choke Point. I spoke to a very, very intelligent person who runs a digital bank this week, and we talked a lot about Operation Choke Point and just how much behind the scenes has been going on from a regulation basis with inside the banks. If you haven't read about it, you can go read more, but Trump has made promises that he will deal with this. He specifically mentioned Operation Choke Point. I will immediately shut down Operation Choke Point. And again, this is to slow down things. It's one thing to have money flowing into it, but if the government's trying to prevent it from having any kind of growth, it becomes a major issue. And so this is something that will be a benefit. And then Senator Loomis out of Wyoming is going to be a major part of the crypto campaign vocally, but also in terms of what's going to go on. So you've got her there, and then you also have who is the leader right now in terms of the betting polls, which got Trump right for Treasury Secretary. Scott Bessent, who would be America's first pro-crypto Treasury Secretary. So just to finish up here, it was also a big week for Bitcoin. Believe it or not, IAU, which is the iShares Gold ETF. These are the assets. Bitcoin reached 34 billion in assets. This is the Bitcoin iShares Bitcoin ETF. It took 1 year from the launch to get more money into the Bitcoin ETF in terms of AUM than the gold ETF, which has been around since 2005. So anyone that wants to compare gold to Bitcoin, there is absolutely no comparison for the future of digital payments, what younger people want, what they believe in. Bitcoin needs to be part of a portfolio, and I do believe people will be making allocations next year, not because necessarily they want to, but because they don't have a choice. In terms of just a technical thing to finish it up, for people that think the S&P at this point looks like the best place, I just want to do some technicals here and show that from a MACD basis, your entry point, so a moving average convergent divergence, from a MACD, the entry point just shows that it's extended. It doesn't mean it's going to go down, but it just means that it's already had a big move. Gold, same thing, up at incredibly high levels, so very overbought. While Bitcoin, just getting a crossover point here. If you go back and look at the crossover points that have happened in the past, you can expect a big move. I do. This is a weekly MACD. For Solana, you also had a switch over there too. And finally, Ethereum. So hope you guys had a profitable week last week. There's a lot of things going on. I'm going to be spending a lot more time on Bitcoin. If you have any questions, reach out and leave stuff in the YouTubes. I'll try to respond to them, but that's it for this week. Thanks.